Okay, good afternoon, traders. Good afternoon. This is me trying to re-record the Monday market update because we had some tech problems there. I'm not entirely sure what's going on there, but I just basically reset everything and we go again. Here we are. Paul's Monday market update, number 216 for Monday, 2nd of March, 2026. I hope you're well. I hope wherever you're joining us, or wherever you're listening to us, I hope you're safe. It has been a rather an eventful weekend, hasn't it? Those of you listening to us for the first time, the Monday market update is just that. It is me flying through as much as I can fit in half an hour, covering strength and weakness within FX markets, looking at indices markets, commodities markets, looking at a few charts of interest. And then having a look at the live markets. It's not a signal service. It's not a trade recommendation service. It's just me sharing with you what I'm looking at the moment. As always, you are very welcome here, but just remember that you are responsible for your own trading decisions. And if you want a bit more help and support in your trading, you can join the VTP tag group, the Trader Accountability Group. Doesn't really matter what you trade or how you trade. It's all about building discipline, accountability, and consistency in your trading business. You can ping me if you've got questions, or that QR code will take you there. Another company that have also been sort of understandably kind of linked or impacted by MFS and private credits is Jefferies. Now, we looked at Jefferies, it must be about 4 or 5 months ago. So the thing about Jefferies is, they're a private financial institution, okay, smaller bank, but nothing remotely like, Goldman Sachs in terms of, size or scope. Um, but what they have done is they kind of tend to basically they tend to focus more on things like those private credit markets, okay, in the other areas, and so they are very sensitive to shifts in sentiment in the kind of private credit space and anything to do with funding costs. So what we see is that there's also a perception about exposure and how that matters just as much as the actual balance sheet risk. Okay, and when we looked at Jefferies a few months ago, it was because they had been exposed to an American car company or American finance company which had basically imploded, and we saw price collapse from $70 down to 50. But then I was curious that we sort of worked our way back up. But you can see again, Woomph, and now we've dropped from like 66 to beneath 46, beneath the weekly 200, which had acted as support in the past. And now, last week we closed, and now it looks like in the pre-market we're opening just a smidge under $44. So, as I said, if you're looking at, if kind of private credit stress spreads, well, then Jefferies continues to underperform, I think, against all of those kind of broader financial companies. So, this might well just be a bellwether. Whilst the world and his wife is focused quite rightly on the Middle East and defense companies and energy companies, I wonder if this is the kind of if this is the quiet, silent assassin that is that is kind of private credit stress. Whether that's sort of sneaking about, causing trouble in the background whilst everybody's distracted by stuff going on in the Middle East. So we'll have to wait and see on that. So there you go. Some charts of interest that you can take away, okay, and work with. Have a look, add to your watch list. But let us now have a look at the live markets themselves. So just bear with me 1 second, and then let's take a look.